Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the Aussies may have underestimated the trouble interest-only mortgage lending may create. But first, a US Fed survey in October 2016, and just published over the weekend, found that most American consumers were doing better financially. But one group, adults without any college education, lost ground for the first time in 3 years. Another more recent survey for 2017 shows that things have improved since there, and the pace of the improvement is quite remarkable, with some key anxieties falling by as much as 10%. In Vietnam overnight, Asia-Pacific trade ministers have agreed to resuscitate the Trans-Pacific trade deal, despite the US pullout. Ministers from 11 remaining countries are planning implementation by November this year, which will bring tariff savings of over $200 million. One estimate by Japan says that the deal without the US will increase New Zealand's GDP by 3.4% and is worth an additional $2.5 billion to our economy over 10 years. The US was at the same APEC meeting, and reports are that the issue brought a heated exchange between them and the other ministers, especially over the new American view of protectionism. In Australia, their embrace of interest-only home loans is facing a fast and potentially painful reversal. APRA flagged the issue in March, and now the main banks are implementing the reversal. The core shift is requiring at least 20% equity, which will stress many borrowers who took out their loans recently. A respected Melbourne institutional investor, JCP Investment Partners, has warned that Irish-style housing losses for the bigger than recognised pool of riskier borrowers could wipe out half of the bank's equity capital. In New York, US Treasury 10-year yield was unchanged at the end of last week at 2.24%. In China, the rate inversion for their government bonds has gotten steeper, with their 5-year now at 3.69 and their 10-year at 3.64. This is a market inversion signal that trouble is coming. Just prior to the GFC, New Zealand had a similar inversion. The price of oil is firmer today by more than $1. The US crude benchmark is now just under $50.50 a barrel, while the Brent benchmark is just under $53.50. The US rig count is now over 900, its highest in 2 years. Had gotten as low as 404 a year ago. Rig counts in the rest of the world are rising too. Gold is up by $6 to $1,252 an ounce, and the Kiwi dollar is a little higher today, and now it's 69.3 US cents. On the cross rates, the Kiwi is at 92.9 Aussie cents and 61.8 Euro cents. The TWI is at 73.5. And we should also note that on Friday night, our own editor, Gareth Vaughan, took out the award for Best Business Reporting for 2017 at the Canon Media Awards as the Business Journalist of the Year. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.